We did
All
it.
right, we are live.
Love you.
Okay, well, I'm so excited. We have Kayla Bredar with us here tonight.
All right.
So quick introductions. My name is Brittany Brainstorm, and that's not my real last name, but it should be. I'm Brittany Bateman, and I own the creative agency Brainstorm Boutique. I am actually in person with my sister and partner in crime, Casey, and she is a very talented designer and a social media performance coach. So we're so excited to do this together. We're in the same little box on the screen tonight, and hopefully we get to do that again. But tonight it's all about Kayla Bredar of Shawnee Financial Services. So if this is your first time watching and meeting Kayla, I'm going to let Kayla go ahead and introduce herself and give a little summary on what she does.
Yes, so not my first rodeo with Brittany, but certainly one of my favorite appointments is to be on Brainstorm Boutique's lives. It's kind of been a following at our house since they started. But anyway, I am Kayla Bredar. I have a small tax practice in Southern Illinois, which is where I'm from. Third generation tax preparer. So this is kind of the family tradition, if you will. We focus mostly on tax preparation, but we do have some bookkeeping clients, some payroll clients. So we kind of keep our feet wet in all of it. We like to focus on small business, but we certainly don't rule out any other types of returns. We do estates trust, C Corps, S Corps, as well as we have quite a few clergy returns too, and those are slightly different than the norm. So a little bit of everything, but we enjoy doing what we do. We love to help people.
Yay! All right, we already got a comment here. Rebecca Owen says, love Kayla. We love Kayla, so we agree. Thank you for watching with us tonight, Rebecca. Awesome. So, Kayla, we have quite a few things we're going to discuss tonight. And the biggest thing is the updated tax deadline. And a lot of people are happy about that, I hope. And then I don't know if you're happy about that, but let's talk about it.
Yeah. So the big thing that happened was the IRS allowed filing to be extended until May 15th for personal and individual tax returns. So there are always a couple deadlines. The first deadline was March 15th for S corporations, C corporations, partnerships. That deadline was not extended. It was still March 15th. So if you didn't get that return in, you need to go ahead and do that. The estates and trusts, those are still due at this time as April 15th. There was no further discussion about that. The IRS just kind of said personal returns. So personal returns, May 15th, gives you a little bit extra time to get your stuff together. If you didn't have all of your documents in, I know a lot of us had some weather hit at the end of February, which pushed the mail around quite a bit. And so brokerage statements, anything like that, sometimes a lot of it was caught in the mail this year. I still had a few clients bringing it in like not all the way up until March 15th, end of March. So good news is if there's something that you're missing, you still have time to get it all together, get it to your tax preparer. There are pros and cons. So what does it mean to move the deadline? You literally have until May 15th to file your return. Also, if you are expected to have a balance due or you owe tax, that payment is also due or March 15th. Sorry, I'm so used to saying April 15th. If I say that, please forgive me. I said March. I'm so tired. It is May 15th. The payment is due May 15th. So traditionally, even if you filed like back in February and you owed tax, payment is not due until May 15th. So May 15th is the go-to date this year. It's just for 1 year. It's an off year. They expect it to go right back to April 15th next year. you know, in the tax world, we've just learned to be loosey goosey these last few years. COVID has taught us that we don't really know what's going to happen. It is not very predictable. So we're kind of just going with the flow. But May 15th did give us an extra little bit of time to maybe not file as many extensions. So gives us some extra times to go ahead and file timely returns for a lot of people. And then there's also a lot of uncertainty still out there. Like this year with the whole unemployment, man, that was a huge, huge update with this tax deadline push. So they passed the stimulus bill, and the stimulus bill, the first $10,200 is non-taxable income. It's a huge, huge, huge deal for a lot of people. So basically, they got to make an extra $10,000 tax-free. Some states.
So that's for everybody, like regardless of tax bracket.
Yeah, that is for everybody. If you drew unemployment last year, the first $10,200 of your unemployment compensation is non-taxable. That was signed into federal law. It really changed a lot of the outcomes on the tax returns that we were doing. So we had some folks that came in early. We went ahead and we filed those returns. The IRS is telling us, don't file an amended return. So in other words, if you had that unemployment compensation on your tax return, you submitted back before the stimulus bill was passed, which I think was like middle of March. If you went ahead and you filed, it's okay. They're supposed to make the adjustment on the backside, meaning they will recalculate your return. And if it results in you getting a bigger refund, they will then send you the difference of what that's going to be. It will probably trigger a notice as well. So don't freak out if you get a piece of paper from the IRS this year. It could mean a lot of things. And it could just be them notifying you, hey, we adjusted the calculation of your return because you had unemployment compensation. It resulted in a bigger refund, and they're just notifying you of it. But it was a huge, huge deal. So it's still really important. Your unemployment is reported on a 1099-G, and it's still super important to put that on your tax return. Even though the first 10,000 is forgivable and it wipes out, there's no tax due on it. Still super important to put it on there. And also for some of the folks that maybe earned more than 10,000 on unemployment compensation, there will be a portion of it that is taxable for anything above that 10,200, as well as some of the states did not go along with the federal ruling. So that was a federal mandate. That was a federal law signed into place. Some states are still taxing the full amount of benefit. So kind of just depends on where you are. Us being in Southern Illinois, we do a lot of returns from Kentucky. And Kentucky is one of those states that still is taxing the full amount. So if you drew Kentucky state employment of $20,000, the full $20,000 is taxable as opposed to only the difference of 10 federally. So just something to be mindful of, as well as that deadline. Of course, the big stimulus payment came out too. That was in there. So just a lot of changes, a lot of updates. It was kind of expected in the tax preparer world. We figured they would have to extend. We didn't know to what extent they would extend, but May 15th, that's what we're going to go with this year.
Hey, an extra month is, good for a lot of people. Okay, Rebecca Owens left a comment and put, how confusing. I did not know there were earlier dates for businesses besides April 15th. So that's okay. That's interesting. Businesses are not the same as the extended deadline.
Yes. So it totally depends on how your business is taxed. So you get into the breakdown of, you can have, so just because you have an LLC does not mean that you are going to be taxed as a sole proprietor. Sometimes LLC folks opt in to being taxed as what they call a subchapter S corporation or a sub S. Some people call it S Corp. It has a lot of different names. They all mean the same thing. But when you elect to file and be taxed in that way, your deadline is actually March 15th. The same thing can be said for a C corporation, also has a specific deadline. The same thing can be said for a partnership. A lot of those type of businesses are what I consider to be extra effort. So nothing really defaults to those. You have to make special elections. You have to step out and say, hey, tax me as this. And so a lot of times people are aware of those. The one that I get into a lot of is partnerships. I've recently had 2 partnerships stumble through my door. They're like, hey, we need to file our taxes. They had no idea when they set up their corporation. Anytime you list 2 or more people, when you are forming that corporation, it defaults to tax as a partnership. Partnerships file a specific form, 1065, and that specific form is due by March 15th.
Wow.
So that's super important. We have a lot of folks, even like husband-wife combinations. They say, hey, we're going to go into business and we're going to own this 50-50. That's pros and cons. I have my own opinion about that, but that's a whole nother conversation for another night. But nonetheless, it results in a partnership being formed and that 1065 having to be filed. March 15th is that deadline. So just know that anytime you're talking about making special elections or changing the way you're taxed, pay attention to the due date. It's super important.
Yeah. I don't know what I'd do without you, Kayla, is all I can say, because when I did my business, I was did an LLC, really had no idea what I was doing. And then we talked about doing a subchapter S, right? And that's what I am, right? With my business.
Yes.
Can you explain a little bit about what that means versus just, and I'm not going to use just a regular LLC.
Because everyone's like Google tells you to LLC.
Right.
Like the first hit.
It is.
You've looked into it.
Yeah. Yeah.
It is. So a lot of times people come in and they're like, oh, I have an LLC. That's great. But do you know why you have an LLC? Most of the time, honestly, people don't know why. They're like, no, I thought that's what I had to have in order to have a business. And that's not exactly true. I think of the term LLC. So it stands for Limited Liability Corporation or Company. And what does that mean? It's a legal term. Think of it through a legal lens. Limited liability. In other words, anything within that company's reach. So if it is pertaining to that company, it limits your personal liability if your company is sued. So there are some times when a limited liability company is absolutely 100%, you don't want to have anything else. Then there are other times where, what you're doing isn't necessarily high risk. You don't have a lot of liability involved. So is it necessary for you to have an LLC? No. Is it going to hurt? Probably not. So that LLC term is thrown around very, very loosely. You can start your business by literally just going to your local courthouse, which in the state of Illinois, this is how we do it. Every state does a little bit different, but in the state of Illinois, you can go to the courthouse and file what they call a DBA certificate. So a doing business as certificate. And that simply means I'm Kayla Bredar and I'm going to DBA Shawnee Financial Services. So I'm Kayla Bredar doing business as Shawnee Financial Services. That DBA certificate, along with my social security number, allows me to set up a business bank account, and bam, I'm a sole proprietor filing a Schedule C. That's really it. And to be honest with you, and if I'm just operating, like, let's say I'm a contractor and I do construction and I'm just known as Kayla Bredar on the street and people hire me to come pour concrete, put on a new roof, I can do business as Kayla Lloyd. I don't even have to have a business name. I've collected income, right? I have expenses as a contractor. I've kept track of those all year long. I file a business return. It is a sole proprietorship. It is on a Schedule C that does get filed with your personal tax return, but it is absolutely a business. So what makes it different? The LLC, like I said, provides that level of protection. By default, an LLC is taxed as what they call a disregarded entity. So you're going to be put on a Schedule C, a Schedule E, which is rentals, or a Schedule F, which is a farm. But all of those, you can be an LLC and taxes all of those. And by default, you must file one of those. Now, an LLC can opt in to being taxed as something else. Most of the time, you'll find that an LLC, at some point, if it makes sense for them, they will be taxed as a sub Chapter S or an S corporation. It adds another layer to your business model. It's a little bit more complex. An S corporation is you're being taxed. Okay, let me back up. C corporation is so confusing. This is why people are like, huh, what?
Yeah,
This is why
I
you need
understand.
you.
Like it's crazy. So a C corporation, or not a C corporation, a Schedule C, I'll get it out here, is subject, any profits you have is subject to self-employment tax.
Mm.
Self-employment tax is a fancy word for Social Security, Medicare tax.
Mm.
And if you work on a W-2 job, you know that every single paycheck you have Social Security and Medicare withheld. That is roughly, you are paying in roughly 15% of whatever you make to Social Security and Medicare. On a W-2, half of that is paid by the employer and half of it is paid by the employee. Okay. Now you're in a Schedule C business, you are self-employed. So as a self-employed person, you're still responsible for your portion of Social Security and Medicare tax at roughly the 15% rate. But instead of the employer having it, you are responsible for the whole entire amount. Now you only pay that on profit. And so on a Schedule C, you can have income minus your expenses and all of your deductions, and you get out to a net line. That net line can be positive, it can be negative. If it's negative, of course, you're not going to pay self-employment tax. There's no profit to pay self-employment tax on. But if it is a positive number, you're going to pay self-employment tax, i.e. Social Security, Medicare tax, and you foot the entire bill. All that to say this, the major thing when you elect to be a sub S business, you are eliminating self-employment tax. That tax is now off the table. You are able to control your income a little bit better. You are issued a K-1. So the sub S is its own individual 110%. It doesn't even go on your tax return. It stands alone. It is what they call a pass-through entity. So you take all the income and all the expense at this level, but then it passes through to your personal return. So in other words, you do the business return first, you get a form here, and that form follows through to your personal return, and you put it on your tax return, and you're taxed based off of that net number. And a lot of things go on at that business level before you get to that net number. So you're able to control what you're paying tax on. And you also eliminate self-employment tax. Now, that can be good, that can be bad. Remember, you're not paying into Social Security. That's a lot. That's retirement for a lot of folks.
Mm-hmm.
Some people want to pay into Social Security. That's their choice, absolutely. And if that's the case, a sub S may not be the way for you to go. It's just a conversation that you need to have with your tax preparer. If I can tell you, usually when I recommend a sub S, it's because self-employment tax is eating someone alive. They're paying ridiculous amounts in. They probably won't get it back out in their lifetime.
Yeah.
And they could be spending and investing that money into a different retirement plan that's going to benefit them more in the long run. Those are usually the folks that I like to see do a sub S.
They could be doing like a Roth IRA or a SEP IRA or 401k or something of that.
Yes.
Well, they wouldn't have a 401k if it's their own business. So
no.
you can have
so right. Yes, there are definitely options for the self-employed person. And there's really just like a ton of different ways to invest it at that point. I always remind people, you own the business. You control the shots. You can say what you invest in, how you invest in it. You can put it all in the stock market. You control the shots. You control the shots on what you get paid, how you get paid, when you get paid. And that's it's the beauty of self-employment. It's also the heartburn of self-employment, right? You're controlling everything. So yes, it can be a lot on your plate. It can be overwhelming. And that's why we always are recommending, I have a team. It's not just me. Yes, I'll take care of the tax portion of it, But I work with some other folks when I'm like, okay, investments here. Let's focus on this person. Here, you need legal work. Let's focus on this person. And a tax preparer can kind of be a hub for a lot of different things like that.
I can definitely see that for sure.
That's crazy.
So
it is.
Okay, this is a side note. Okay,
Yes.
oh gosh, I think it was last year. I really started getting into, my finances and my investments, and it was a couple of years ago actually, but I decided to actually go and register on the Social Security website to see what the estimated amount was, and it is nothing, at least for me. And it just, to me, was a wake-up call of the importance of having these extra investments on, in other areas, especially with like a Roth IRA or something like that. So if anyone's listening and they have their own business, think about these things. It's not just the net money that you have to go spend, and I know there's a lot of expenses in life, but if there's a way to budget that out to start investing for your future, for your retirement, let's not sleep on that. Let's all be financially stable in our retirement years.
Yes, so true.
That's so important. But Casey, do you have any questions on anything she said in that?
I know it was kind of a lot. Like, I feel like sometimes it's like word diarrhea. So I'm sorry.
Going all the way back to the very beginning when you were talking about the DBA certificate.
Yes.
Oh, that's good. Yeah.
I'm curious, because of personal reasons that were earlier discussed.
Yes.
That we don't want everyone to know about. But so let's say that I march my little butt over to the courthouse and I'm going to get my DBA certificate. Mm-hmm. What do I need in order to be listen, I've been taking money. I need to
Nothing.
What do I need? Nothing?
You, yourself, and I think you have to have a driver's license. I think you have to prove that you have an address in said location, county. Right? You're not going to go to a courthouse 6 counties away. You're going to have some relationship to the courthouse that you're visiting. But really, that's it. It truly is that simple. You don't have to have anything else. It's you, yourself, and I, and it's just simply saying hey, this is what I'm going to do. And honest to goodness, it's really more, you're getting that DBA certificate really more for the bank than you are anybody. And it's just because when you go to set up a bank account, so Casey's going to mow yards and she's going to call it Casey's Lawn Care. Okay. So when you are collecting money and you are, remember, one of my main rules is that if it's a real business and if you are going to treat it as a business, you want the IRS to look at you as a business. One of my big rules is, and it's totally Kayla's rule, it's not an IRS rule, but it's Kayla's rule of you should have a bank account for said business that is just that business. It's not your personal account. You don't pay your bills out of it. It only captures your business income and your business expenses. So, and to do that at the bank, to get a bank account that's just for Casey's Lawn Service, they require that DBA certificate. Mm-hmm. And that's really why you're going and getting it. Otherwise, the IRS doesn't really care that you operated as Casey's Lawn Service. What they care about is, did you claim the income for tax purposes? Okay. That's what they're looking for. And if you set up a bank account under your, let's say you have 3 bank accounts and you're running money through, it can be a little suspicious to the IRS. So they might, if they feel like you're hiding income and stuff like that, folks, they already know about your bank accounts. So let's just be honest and open about it. Is it a business account? If so, we're probably going to need to claim all the income that came through that business account. They already know about it. So make it official kind of deal. Does that answer your question?
Yeah, I had no idea that it was that easy to get a DBA, because for a short amount of time in my life, whenever I was going to school, I was also a bank teller. Mm-hmm. And people would come in and I'd be doing all these DBA things. But I never, I was a bank teller. I never helped people open accounts. And I always wondered how did this person get this DBA? Because they would do exactly what you're talking about. So it'd be like, you know, Kayla, DBA Kayla, you know what I mean?
Mhm.
So anyway, that's it.
So
Yep,
like,
you're right.
so interesting.
That's-
I never thought that I didn't know that that was what people were doing.
So
Yes.
does it cost money to register as to do a DBA?
Yes,
Is there
I
fee?
think so. So once again, that's kind of dependent on where you are. Most places do have a fee. It's super nominal, like I mean, $25, $15.
Wow.
I think the highest one I've heard of is like around 45, but
Well,
it's
way
not
cheaper
much.
than the LLC.
Yeah, so it truly
Yes,
is more,
so
like,
much cheaper.
effective.
And that brings on another great point. So another one of those things, like when you go to do an LLC, folks, check yourself. Is that necessary? Because you could just be spending a whole lot of money for no good reason.
While you're still
And that's
building
like
your
super
business.
sad to me, is to see someone who's trying to start up a new business and they may have like a great idea, a great product and all this, and they're stressing themselves out with these unnecessary expenses. Don't do that.
Okay, see, that's where I should have contacted you from the very beginning, but I didn't know. And
Sure.
I did an LLC, like as soon as I had my idea, I did the LLC and all that. And so I think it worked out for me to do an LLC, but I still I could have gone a period of time without having done that.
Yes. No, you so could have. And I think sometimes the Schedule C, which is like truly the most basic form of a business tax return, I think sometimes it gets a bad rap because people feel like, oh, well, this isn't legit enough. Folks, that's so far from the truth. It's not even funny. Like I have very legit businesses that are grossing like $300,000, $400,000 on a Schedule C. Like they turned over, their hands touched that much money. Now that's not their net line. Like expenses come off, whatever. But I mean, that's a legit business. If it's turning over that much money and it's collecting that much money at some point through the year, it's a legit business. So don't let that whole like, oh, well, this is just a sole proprietorship. Like it's a business. It is a business. So don't count yourself out. And it's no big deal to not be an LLC. Now, granted, like I said, there are times when it is important. I just was talking to a client the other day and they're starting like, is it an asphalt business? Okay. That's a little bit more liability than Brittany doing brainstorming sessions and making websites. Like, I think we all can agree here. Totally different
Kayla,
businesses.
can I go back? Is it too late? I already paid for it.
It is what it is, Brittany. You got the coverage. Nobody's going to sue you at this point.
Hey, we got a little comment. We got big comment here. Christy Saylor says, "Hi, ladies. Kayla is the best." Absolutely agree, Christy. We are all big Kayla fans around here. So
thank you, Christy.
Thank you for tuning in, Christy.
That's right.
If you guys have any questions for Kayla too, just pop them in the chat. If you're on my personal account, it won't show up, but I'm trying to keep an eye on that. Otherwise, come over to the Brainstorm Boutique Facebook account and I can see those in real time. So, Kayla, I think this is a great segue to the other two topics that we discussed.
Yes.
One, I definitely want to talk about the PPP loan. And then we'll finish with the when is your hobby a business?
Sure.
Because the Schedule C, which we've talked about a lot, kind of goes over into the PPP loans situation.
Yes.
So I'll let you take the reins on that, Kayla.
So once again, the big wide world of stimulus that the government has. Thank you, COVID. Thank you for screwing up all of the tax preparers' lives for forever. No, it's been great. It's been great for businesses to get this money. I'm a little bit worried about the government and handing out all this money. I'm not sure where we're going to come back up with it, but we'll worry about that another day. For right now, let's focus on how can you get the PPP? What is the PPP? Who's eligible? All of those goodies. So with the first stimulus bill that was passed last year, that is when this first came out. So it kind of was like a whirlwind. They came out with a lot of different options for business. The PPP came out with a certain set of rules. That set of rules has since changed like 2, 3, 4 times. And actually, I'm going to be honest with you. If you talk to any banker, it changes daily, literally daily. So it's super crazy to stay on top of it. Even like my most like super picky business owners who are just on top of everything, they dot every I, cross every T. They're even coming to me like, I don't even know, Kayla. And it's so don't feel overwhelmed. Reach out. We're all trying to learn together. That's what I want to like. We're all learning. Literally, I have been talking with like bankers and they're like, Kayla, did you know this? No, I had no idea. That was like 2 hours ago and it's already changed. So just know that. PPP came out last year. It was what they call the first draw. Since then, we now have a second draw. So there's actually 2 different PPP loans someone can get. Currently, the rules stand. Basically, if you are a business, you can apply for the first go. They're literally, so they want you to have wages. What are wages? Okay. For a self-employed person. So if you filed a Schedule C business as a sole proprietor, you are considered self-employed. Based off of that, they will take line 7 and they minus some other numbers out of that and kind of wiggle around. But basically, they're going off of your gross income. Big deal. Remember when I said you can actually net out a positive or a negative number? For the PPP, it does not matter if your business lost money. Take either 19 or 20, the highest year of your gross. Go get yourself a first draft PPP loan. You can't go wrong. I highly suggest you talk to a banker. It's totally worth it. Totally worth it. Like it's literally just that simple. And the perk of this is, okay, it's called a loan. Payment, what is it? Paycheck Protection Loan is PPP. Paycheck Protection. Okay. It's paycheck protection and then something else. Okay. But like I said, this is changing on the daily. Main thing to remember is that it's a forgivable loan. Forgivable loan means free money. Okay. What you have to do is you have to spend the money on certain things. So if you are a self-employed person, it can be considered wages. It can be considered rent. It can be considered there's certain like spending stipulations on it. Okay. But as a self-employed person, if you if you get $5,000 on a PPP loan, you can turn around and write yourself a $5,000 check as owner's compensation replacement. Bam, your loan's forgiven.
Wow.
It's that simple. Like literally, if you own a business, you should be knocking on your banker's door trying to get one of those first draft PPP loans. It's a great deal. So
that was so it's not too late to get a first draft one?
No. So it came out last year, but it has been an ongoing process. Actually, they just extended that deadline. You have until May 31st. There are still PPP funds available. You have until May 31st to apply. At the same time, simultaneously is the second draft that is active and out there. So this is for anybody who did get the first one. Now they came up with rules for the second one, and you have to have a 25% decrease in gross revenue, either a quarter or over the whole entire year. So that means look at your income 2 different ways. Break it out by quarter. I have seen very, very, very few businesses who cannot meet that guideline. Very few. Almost everybody meets the guideline because let's face it, last year for 2.5 quarters, a lot of stuff was shut down completely.
Yeah.
They were deemed non-essential business. They couldn't have anybody coming in. So their income was very, very low. And wow, it made a huge difference. They're able, because what's really cool about that second draft, so as long as you can show that decrease, you qualify to apply, but then they can turn around and use your higher gross number to get you the most money.
Wow.
So, like I said, it's totally worth your conversation. If you're not sure that you're going to apply, I highly suggest you reach out to the banker. Call me. I will tell you. I cannot give the loans. They have to be gone. They have to go through a bank. So what it is SBA. So small business they are the ones backing these loans. So you go to the bank, you actually fill out the application, submit all the documents through the bank. The bank is sending this loan to the SBA. The SBA is approving it and giving it, basically it sends it back to the bank and says, yes, you can give this loan. I will vouch for this person and I will cover this loan if in default. So it's a great, it's crazy. It's crazy how it's operating.
Yeah.
And oh, by the way, these loans are on the table too. You don't have to just be a Schedule C. So you can be an S Corp, you can be a C Corp, you can be a partnership. Also, farmers, take note, huge deal for farms is that they can also use that gross income line. So because I'm going to be honest with you, most farms operate at a loss, and a lot of them are at like a big loss.
Wow.
It's not just a small loss. So any of your farms, that gross line, super important. You can take an average over 12 months, multiply it by 2.5. That kind of gives you your amount. That works for the Schedule C folks too. Like I said, there's some other calculations that fall into that on a Schedule C, but wages. The big thing for your subchapter S, your C corporation, is if they had any payroll. So if they filled out quarterly payroll reports, 941s, that qualifies them. They can get it based off of wages. Once again, really big deal. Reach out to me, reach out to the bank. Make sure that you're taking advantage of all of these offers.
Yeah. Okay. So I have a couple scenarios.
Yeah.
I want to ask you about. I feel like I freestyle you and you always have the answers. So forgive me if I have a stupid question, but
no.
One, this is more of a statement, but
Okay.
I have a lot of friends who are wedding photographers. And definitely, weddings were shut down, only certain types of weddings, people had really small elopement weddings, those are fun, but it wasn't that big, wedding, the big packages that photographers would have had otherwise. With them, as long as they're, obviously claiming their taxes, are a legit business and all of that, then they could do the first and second round, correct?
Yeah. So if they can, so first round is first round, right? There really is no major, if you file a Schedule C and you have something written on line 7 of that Schedule C, that qualifies you for first round. There are some, like I said, in the calculation, there are some things that you have to subtract out of there, but in the type of business that you're talking about, there's not going to be anything on those other lines. Whatever's on line 7, they take an average over 12 months and then multiply it by 2.5. And that's the amount that you would qualify for on that first round. Then on second round, so that was in 19. Most people were going to use 19 tax return to determine that number. Then if from 2019 to 2020, you can show an overall loss of 25%, or a quarter loss of 25%, you qualify for the second round, the second draw, PPP, and you can use that same 19 figure for the second go. So basically, whatever you got the first time, you'll get the second time. Does that make sense? Or it's clear as mud?
Kind of makes sense.
I know. It blows my mind too. So
that's crazy. So okay, other hypothetical, because this is what I love. Say photographer beginning of the year didn't have as many weddings, but then later in the year, all of the weddings were rescheduled, right? And then technically, typically a lot of, people would pay ahead of time and stuff like that. But let's just say hypothetical that they made all this money during this quarter, but they had a loss at this quarter. Would it go based on that quarter with the loss versus the one that went really well? Yeah,
it would. You could easily say, so what I'm finding is that the losses usually happen in second or third quarter. So most of the shutdowns happened, I think, like March. Okay, yeah. March ended your first quarter. So what we saw was that when they started the second quarter, which is April, May, June, that's when things were kind of tanking. And people went, like, it just kind of nosedived for those businesses that closed. I mean, they closed, right? So they can't do anything. Or if they have anything coming in, it's like a check that someone sent them through the mail of hopes one day of having a wedding photographer. You know what I mean? So it's really little, really minimal. So based off of what you're saying, yes, even if they were up 1 year, like from 19 to 20, let's say on the off chance their 20 income is actually higher, if they can still show a loss per quarter in 20, they still would qualify, even though they're up for the entire year.
Interesting. Okay.
Yeah.
Okay.
Super crazy, super wonky. Doesn't make a lot of sense, but that's the rule.
Here we are.
Very crazy, as you know, anything that deals with this. Actually, I got a comment on my personal broadcast, and Sarah McCluskey, who is a lawyer, she says LLC is good for legal purposes, though, with a winky face. And yes, we would definitely agree with that. It would protect you in a lot of areas, which, you know, again, depending on your business, depending on the type of people you're dealing with.
That's what's interesting is, like, I never thought about what I would actually need going into it.
Yes.
Maybe you need even more. Maybe you need like a super lockdown.
Yeah, you don't. And sometimes too, when you're just starting off, the kicker is that you don't have the money to fund an LLC.
Yeah.
Like, you don't have that extra $300-ish to get going. And so you're starting out. You got to figure out a way to make it work now. Well, it's a whole lot easier to come up with $25, $35, $45 than it is $300, $400, $500. And so you got to start somewhere, right? And she's not wrong. You do there is legal benefits to that. But there's also liability. Like I said, some things are less liable than the others, but good idea.
Essentially, if someone who's watching right now is interested in starting a business, you need to have a chat with Kayla or someone at a small business incubator, and just hash out all those details to decide what's really right for you. So I know we kind of deviate a little bit from the PPP loan with that, but Kayla, I really appreciate that information. I think I did have another scenario I wanted to ask.
Yes.
Okay, so say someone had a business and they were somewhere else and COVID happened or whatever, and they decided to move, you know, maybe closer to family or a more cost-effective way of, you know, place to live. And then they created a new business. Technically, if they're the person, you know, depending on if it's DBA or LLC, if their new business technically started after, I think, what was it, like February 2020, or there's like a like you couldn't have just started a business and then get PPP loan.
Right.
There's some stipulations with that, correct?
Right. There are. Like, I don't have the exact date, but I think you had to be in business. Actually, like, the date is in 2019. I believe you had to be an active business sometime in 2019 in order to qualify for these things. So no, it couldn't have been like a brand new business. You had to have been an established business. I can find the exact date and post it in the comments, but there is a date associated with that. You can't just be brand new. But it doesn't, if you are operating as a DBA and you're operating under your Social Security number or an EIN, and you did business over here in Illinois, but in halfway through the year, you moved to Florida and you quarantined in Florida like any smart person would have done, and you did business in Florida, it still counts.
Okay. All right, good. So basically, if you had a business during that time frame, connect with the bank, figure out if you're qualified, always ask. You never know, right?
Yes, you never know. The worst thing they're going to do is tell you no to free money. Okay, but Hey, free money. Oh, and also I want to point out too, one more thing on that. It is forgivable if you abide by the rules and you spend it on the things they tell you to spend it on. If for any reason you don't meet those qualifications and you spent it on things you weren't supposed to, or whatever you got outside of those guidelines, it results to a true loan. And it's 1% money. So that's your interest rate on that note, which is kind of mind blowing. Like you can find a 1% interest loan for like nowhere. You can't find those. Those don't exist. So still not the worst idea. I still recommend everybody go and see if you qualify.
So like, for example, if you got a good amount and you're like, hey, I'm going to make him, and I don't know if this is a part of that stipulation up, but say you're like, hey, I want to remodel, give my shop a facelift or something like that. If it wasn't covered, then basically you just got a 1% loan to make those updates that you're wanting to do for your business.
Right. And a lot of times that option is not published because folks, all you have to do is write yourself a check. Like there should be no reason this isn't forgivable, right? So like a lot of times bankers aren't even thinking in those terms. I know I certainly as a tax preparer am not thinking in those terms. Like, no, come to me. I promise you, I can find you a way to spend that money that would result in it being a forgivable loan. Like I don't even really want to harp on how it turns into 1%. Because that's just a waste of 1%. Like it's great that it's only 1%, but it still is a waste that it's 1%. Come talk to me. I promise we can come up with a way to get it forgivable.
Yeah. So one more thing though. You have a business, you have payroll, you're going to write that check. You still have to do those payroll taxes though, correct?
Yes. So that is if you are actually running a payroll, yes. You are going to put, for instance, let's say you are a sub S business, you have a payroll, you are the owner of the business, but you are also an employee of the business, meaning that you are paid on a W-2 from your company. You get a $5,000 PPP loan. You are going to write yourself a $5,000 check in wages. You will write that check and run it through your payroll system. So bonus yourself $5,000, subject to all of the taxes, all payroll taxes, Social Security, Medicare, all of those things. This is one of those super gray areas. IRS hasn't given a whole lot of guideline. The PPP is a little wishy-washy on how they are going to look at things. But here's what I can tell you. You're going ahead and you're paying the tax on it. So you're really going ahead and being very conservative with those funds. You're not trying to hide them, scapegoat, get around taxes. Nope. We're saying, hey, you gave me $5,000. It's okay. I'll go ahead and I'll give you your portion back in the form of taxes. Like I said, that there's nothing that says you have to at this point that I know of. Rules change all the time, but nothing that I know of that says you have to. I'm just saying, hey, they gave that to you based off of wages on a 941. So let's go ahead and let's run it back through payroll, meaning that they take their portion back out of that and you pay it that way. It just makes me feel better because we really don't know how this is going to end up. We really don't know what other rules they're going to change. And I don't like to see people get it. Yeah, it's safe. I don't like to see people get into a bind with it either.
And so let me just, I've learned so much through you, Kayla, and I love it because I know say you're going to write yourself that $5,000 check, you're going to have a portion taken out that will be your employee responsibility for taxes. But then as the business, you're going to pay a percentage more because you have to match that employee portion. So technically that $5,000 will be more physically coming out of your bank account.
Yes.
Correct.
Yes, that is correct. Yes, that's how that would work. It's not going to be a lot more. Remember, you're paying as an employer, you are due to pay your portion of Social Security and Medicare tax. And that's really what you're going to pay. You're also going to pay some unemployment tax on that, but it's going to be very nominal. Yeah. You're really mostly paying Social Security and Medicare tax, and it's a good idea too.
And that's like if they're using QuickBooks or something like that runs, because if they're just writing themselves a check without running it through anything like that, that portion will eventually catch up.
Yes. Yes.
At tax time or your quarterly tax time and
Yes.
things like that.
Yes.
But that's like a whole nother conversation. Kayla, we're gonna have to have we just need to have quarterly Kayla conversations, okay? Because it's mind-blowing all the things that are involved in this. But it's so important, right? Because
I don't know. I'm such a money baby.
When we don't know these things, it can keep you from going after those things you want to do for the fear of not knowing, you know?
Sure.
Real quick, we had a comment from Sarah McCluskey. She says, so informative. Thanks, ladies. Thank you, Sarah, for watching with us tonight.
Thank you.
So we're okay, we've been talking for 50 minutes. All right, Kayla, I want to talk to you like all night long, but I know you got a family and all that. So let's do.
You got the whole shebang, Kayla.
Grant's watching, like, where's my wife? How long is Brittany going to chat with her tonight? You know, your boys are waiting. But I do want to touch on when are you doing a hobby and when are you having a business?
So, Mill, that is so a loaded question.
You're welcome.
Yes. There are benefits to having a small business. There are benefits to being self-employed. It's work. So it's a lot of work. Like, I think sometimes being self-employed, they're like, oh, you work from home. Oh, you set your own schedule. Folks, let me tell you, there is a massive amount of dedication that comes with running your own business, no matter how small or how big your business is. Self-employment is not for the faint of heart. So keep that in mind. You know, some people, a lot of times hobbies are fun. Hobbies are enjoyable. Now, that's not to say that your small business can't be fun and enjoyable. It can be. But know that when you decide, hey, I want to do this for real, I want to do this as a business, know that you're going to have to up the ante. Like, you're going to have to now toe the line because the IRS is going to be essentially watching you. That's what you're doing. You're waving your hand. You're saying, hey, yes, this was a hobby, but I'm ready to take this to the next level. What does that mean? What are the consequences? What are the implications? As we talked about earlier, that bank account, that's one of the biggest things that I see in someone who wants to take it from a hobby to a business. Are you ready to go through the hassle of getting a separate bank account and maintaining it? What is, depending on your answer to that question, kind of tells me if you're ready to take that hobby to a business. Are you currently working a W-2 job, and is this something that you hope to transition out of? I had a lady in the office today, and she's like, listen, this is where I work. I'm putting myself on a timeline, and in 6 months' time, I really want to be able to quit my W-2 job and to be able to focus totally on my my small business. First of all, I commend anyone who's wanting to make that jump. That is a dive, okay? W-2 is super confident. That's super steadfast. Banks look at a W-2 differently than they look at self-employment. Huge thing, folks. If you are about ready to go buy a house or you are going to need to go to the bank to get some loans, think twice before self-employment is your only income. A lot of times banks are going to want 2, 3, sometimes 4 years worth of tax returns showing self-employment income as opposed to that W-2. Like, you could have only worked at that job for a year, but they treat it very differently than that self-employment. I don't always like that rule. I don't always agree with that rule, but nonetheless, that's the way the world works. And they didn't ask me. I don't run the world. So that's just the thing. So know that before you dive headfirst and your hobby becomes a small business and that's all you do, ask yourself some of those questions. With all that being said, I have some folks who are W-2 wage earners, and let's say they are high wage earners. So they make quite a bit of money on a W-2, well into six figures. No dependents. They just, could be a married couple. It could be a single person. I've had two cases this year. One was a married couple, one was a single individual. Nonetheless, high wage earners. And they're coming to me and they're like, Kayla, I'm hemorrhaging money. I'm having to pay so much money in tax. What can I do? How can I get around this? There are options. Some of them will be viable options and some of them won't be. But one of the things I always talk about people is, tell me about your hobbies. What are you doing? Because a lot of times you have folks who, they have their job and then they have this side gig and they make money at their side gig, but they've never like, oh, that's really not a business. Like, that's what I just do. Like, I just do that. Okay, but here's the thing. Have you ever tracked how much money you're putting into your quote unquote hobby and how much money you make off your hobby? I had some folks that came in and they ended up giving me their stuff at the end of the year, and they spent, like, once again, high wage earners, they had spent maybe like $20,000 in their hobby, what they felt was just a hobby. Now, they had also made money, right? And so this whole situation, I'm like, y'all, you're spending a lot of money. Like, you have a lot of expense in this hobby, and you're actually generating money off of that. So let's look at that, because if your business is showing a loss, I'd like to maximize that loss for as long as I can, because that loss is going to lower your taxable income, which is going to in turn lower your tax liability or how much tax you're paying in. So let's maximize the loss from your hobby. Now, granted, the IRS has rules on what is a hobby versus what is a small business. And the IRS is saying, hey, I'm going to need you to show a profit 3 out of the last 5 years. If you can't show me a profit, if you can't show me how you're making money or how this is a business, then I'm going to deem it as a hobby. Okay. Those are super gray worlds. I always have the honest conversation with folks that come in and they sit in my office and we talk about this. As a tax preparer, you see a lot of things, you hear a lot of different business ideas. And after like the first year or two, I can pretty much know how this is going to go. This is going to go well. We'll be able to defend our case to the IRS if ever asked. And then there are certain times when I'm like, yo, this ain't a good idea. We need to wrap this up. We need to find a different hobby because this one ain't working. So, and to be honest with you, like, you need a tax preparer that works with you like that. Like, you need to be honest with them. You need to have faith and be comfortable around them enough to tell them all of the things, and vice versa. You need them to give you the cold, hard truth. Sometimes you're going to want to hear it. Sometimes you're not. But right now, one of my biggest things is I have some folks who are fishermen. So I don't know if some people are really familiar with the world of competitive fishing. Some people are not. I have a father who has always fished tournaments like my whole life. And I never knew that some people look at this as a business. I mean, I do now that I'm doing taxes, but growing up, I had no idea, right? So now these fishermen, and one fisherman particularly comes to mind, he will turn over within a year. He hundreds of thousands of dollars. Okay. Right. That's how much he's made.
Wow. I need to learn how to fish.
I know. Right. I know. So they literally will win hundreds of thousands of dollars. Okay. Well, they have expense. Like, they're traveling to lakes. They buy lures. They buy fishing poles. They have boats. They have mileage. They have truck. They have gas. They have oil.
Not a cheap hobby.
Yes. So they have all of this stuff. Right. Okay. Well, if something is turning over hundreds of thousands of dollars, it's really hard to look at them and be like, this isn't a business. This is a hobby. I'm like, I need a hobby like that. So, right. So this is one of the super gray areas right now that it's like tax preparers facing off against the IRS, facing off against the states. They're coming in and they're saying, hey, you're fishermen. No, you can't take these deductions. These are not allowable losses. This is not an allowable business expense. These are not, we want you to go ahead and claim that income that you've made off of your winnings, but we're only going to allow you to take expenses up to that number. So if you've won $200,000, in other words, I can only take $200,000 of expense. Now, they might have like $300,000 or $400,000 of expense or whatever the case may be. It doesn't really seem fair. And there have been cases, even recently in our practice, where we've put up a good fight. Like we've said, hey, listen, these are the receipts. This is why they're due this loss. And we've also had auditors be like, we're going to deny this every time. Well, that's okay. We're going to fight about it every time because I still feel pretty passionate that this person turning over that much money, they got a business going on. Whether you want to agree with that or not, it's a business. And right now there's been like no super formal ruling come down from the IRS on that. So once again, is it a hobby? Is it a business?
I mean,
I don't know.
If you can make money off of Instagram, right? Like fishing, hunting, all those things. And if there's ways to earn money off of that, like that's a legit, why isn't that more of a business than promoting products on your Instagram account? You know?
And that is, and I think there would be some very, very valid arts. Like, a lot of the fishermen that I know, like it is a sport. It truly is. It truly is a sport. There are good fishermen and there are bad fishermen, right? It's a sport. It's a skill. The more you do it, the more you practice, the better you become at it. And so, I think there will be a true argument, that at some point will go before the IRS.
I think she's muted.
I think we lost you, Kayla.
Yeah, sorry. Did you come back?
Yeah, there you go.
Okay. Yeah, so I think I do think that there will be a decision to be made on that. And there are other hobbies that are similar, and there are other hobbies too that are like more safe, not as lucrative as maybe the fishing world. But I always say have a conversation with your tax preparer. Don't leave them in the dark. Especially like I said, I a lot of times will have that conversation with people. Hey, tell me, are you doing other things on the side? Do you consider that a business? And sometimes, like for instance, it may be the guy down the street who fixes lawnmowers for fun because he likes to tinker in the shop, and he may only do it a couple times throughout the year. Is he supposed to claim that money? Technically, in practice, does he? No, I'm going to be real honest with you. That guy probably isn't going to claim that money. And I'm going to be like, hey, dude, keep the cash and let's roll on. So there are going to be times like that when it's, because what I'm telling him is, your expenses and your time are going to much outweigh what we claim. And the IRS isn't looking for super small potatoes. They're looking for some people who are like trying to do things on the down low and not be on the up and up. And there are things like that I can tell you, like I said, after 1 or 2 years, I usually can tell people, this is good. We're on to something here. This is a viable business. Your hobby, absolutely, let's go with it. And then there are other times when we'll have to shake them off and say, no, guys, this just isn't going to work. Let's find something else.
Yeah. So, okay. I'm going to use photography as an example because that is one of those things. It's like, oh, I'm a photographer. I do it as a hobby. And then when should they start claiming that? Is it a certain dollar amount? Is it a certain time that you're doing this amount? Like when is it time to be claiming that money, paying those taxes, and being on the record?
Yeah, I think that this is it's a gray area. There are a lot of times I run into people and they don't want to tell their tax preparer about their side gigs in fear that their tax preparer is going to insist that they put the money on the tax return. technically any amount of money you should be claiming. There's no like magic dollar amount, right? There is such thing as the 1099 threshold. So if you, especially in the world of photography, if you are performing a service and someone pays you over $600, they technically have a requirement to issue you a 1099 statement. And technically, if you receive a 1099, that is reported income, and you should report that on your personal tax return. So there's that threshold. And a lot of times, if it's less than $600, less than that 1099 amount, people tend not to claim it. And the other can be said, like that person can still take it off as a deduction on their return if it's applicable in that situation. So you have that threshold. I have a lot of people who intentionally will only do jobs under that threshold, and then they never tell their tax preparer about them. Is that right? Probably not. Sometimes it's better to have the don't ask, don't tell policy. And I have clients that come in and they're like, we're not going to talk about that. That we don't talk about it. So, it's one of those things. Is that right? Probably not. I, as a tax preparer, have due diligence that I am responsible for. As a tax professional, I am issued a number by the IRS every year, a P10, and I have to, in good faith, say, yes, the returns that I'm preparing are done in good faith. I'm preparing them to the best of my knowledge. So once again, it's a super gray area. When should you start claiming? Well, you should always claim your money. But what I tell people too is, don't let that freak you out, because you can claim your expense too. So let's talk about what your expenses are, because even if I claim your income, I almost always, you have viable expenses that will eat up most of that income. And then it doesn't matter. You've reported, which is what you were supposed to do. And you've also reported your expenses, which is you have the right to. So don't shy away from it. That's the other thing. Let it work for you. And that's kind of where we get into, is your hobby technically a business? And if so, let's make it work for you. Let's go ahead and put it on there. And I always take the approach to, the worst thing they're going to do is send you a notice and say, hey, don't do this anymore. Okay. We won't do it anymore. But as a tax preparer, once again, there are times when I feel very comfortable saying, no, I'll take up this fight for you, because I believe that this is a business and this is how we're going to prove it. And a lot of times that's what I'm looking at is, am I going to willfully submit my name on a piece of paper in due diligence to file this return, first of all? And second of all, would I stand up for this person in front of an auditor and say, yes, this is a viable business and this is why? If both of those questions can be answered, then I see no qualms about putting it on there. In fact, I tell people to, and let me work with you on expense.
That's awesome.
Your job is so wild.
I know. I didn't know like tax preparers had to deal with all of this. You're an advocate, for your clients and for their money.
Crazy.
Yes, that is okay. So that is one of my biggest pet peeves, like people being scared of their tax preparer. Folks, your tax preparer works for you. Yeah. We do not work for the IRS. We don't do it. Our job is to take their rules, to take their guidelines, and make them work for the client. I work for you. You are writing me the check, not the IRS. They're not writing me the check. Yeah. I don't really want to be the police for them. What my job is to make you legal, make you in compliance, but also make the laws work for you. Baby, there are loopholes in those laws. Make it work for you. Have someone that's willing to find those loopholes and use them to your advantage. There's nothing wrong. That's why we keep having more and more tax law. Like they're like, oh, okay, we need to plug this hole. Oh, okay, we need to plug this hole. And they do, but that's okay. We can keep making that tax law work for us. There's nothing wrong with walking on the edge. I know that like wakes some people out. They're like, oh, I can't do that. Okay, we won't do that. But as a tax preparer, it's my job to advise you on when it's okay to do so. And I work for you. I do not work for the government. I do not work for the IRS. Make sure you have a tax preparer who holds that value.
Yeah. Well, I'm glad you're my tax preparer, because my life has been like so much easier, so less stressful. I seriously tell everybody, I'm like, like if they're like, I'd like to do this, but I don't know how to start, it's like, well, talk to Kayla. So, so I might be giving too many people your information, but like, don't let these fears keep you from going after what it is you want to do. And, I mean, our level of what we're bringing in, hopefully we get to that huge level one day, right? But what people are doing at a higher level, and they have multi-million dollar businesses, like
Right.
they get to make everything work for them. And we're just trying to have decent lifestyles. We're just trying to do our passions and pay our taxes, right?
That's right.
And do it legally. And why shouldn't we have things to work for us too? So there is power for the little guy. And really it starts with your tax person.
It does. A lot of it does. It really does.
Oh my gosh. Well, Kayla, I'm so glad you got to join us tonight. I know we went over an hour, but hey, I literally, like, I was telling someone the other day, I was like, I call Kayla every day if I knew it wouldn't annoy her, because I just feel like, Kayla, let's talk about this. I am so fascinated with taxes. It's really ridiculous, like how
Brittany,
obsessed
people are gonna think you're weird if you say that too many times.
I know. I am so. It's ridiculous. Brent Bickett says good stuff. Lots of exclamation. Oh, sorry. I can't read very well. 1 exclamation point. Thank you, Brent, for watching and tuning in. Share this with anyone who needs to know this information. This is knowledge is power, right? And you have to find the experts. You have to find the people that know that stuff. And let's take these fears away. Like let's not let these things hold us back anymore. And okay, Brent, he just posted all the exclamation points.
I love it.
Thank you, Brent. But Kayla, thank you so much again. So tell people how they can find you, how they can get a hold of you.
Yes. So I will post my contact information in the comments, but always a phone call away, email away, whatever works best for y'all. I still have folks that mail me their stuff. I also have a fax. People fax me their stuff. Literally, we have all ages at this practice, and we accept all different kinds. I just was hand delivered today a big old tote of receipts. So anyway, every way, we will help you any way we can. I am based in Marion, Illinois. So if you're somewhere close, we are taking in-person appointments now. I know that's kind of been a thing. We've only done that for half of the season, but we're vaccinated in this office and we feel comfortable doing as such. So I'm happy to get you an in-person appointment, or like I said, if you're further away, I have folks in Alaska and Florida and California. So you can always get me your stuff a different way. That works too.
Wonderful. Well, Kayla, thank you so much.
Absolutely.
We're going to talk about when we can have you back on again. And we'll just keep sharing this information so people feel inspired to go after and make money.
Sounds good to me. Thank you, ladies. It was a pleasure.
Bye, Kayla.
See ya.
Bye-bye. You too.
Bye.